right. Good morning, everybody. Good morning, everybody. This is Yomi, and I'm trying to get something set here. Ready? Okay. All right. Good morning, traders, ladies and gentlemen. My name is Abayomi Oyeshola, and I am happy to be here with you guys again. And this is our program. This is our bootcamp, the long-awaited bootcamp on how to pass your prop accounts and get funded. And this, I'm doing this alongside my team members, the ProCycle team. And you can find me on Twitter at Yomi Oyeshola. At Yomi Oyeshola is my Twitter handle. And it's my pleasure to welcome you guys back. So this is actually a re-recording of our first day, the first day of our bootcamp training on PYP, that's Pass Your Prop. And I just want us to hear the lessons again. And I hope you will have a wonderful training experience with me and my team members. So I would like to get started. And like I said earlier on my Twitter handle, that the content of the bootcamp training is split into 3 days. So on the first day, which is today, we'll be talking about what prop firms are all about. You hear a little bit about my story and about ProCycle. Then you hear about my experience trading prop firms. I'll share with you some of my testimonials. Then on day 2, we are going to be learning about how to trading plan, how to execute your trading plan. You learn about discipline. You get more testimonials. Then you learn about the prop firm trading, how to trade prop firm, the psychology behind trading prop firms. And then I'll teach you about analysis, discipline, and execution. On day 3, you're going to be learning about the best strategy setup to trade and pass your prop accounts. So we have one of the best strategies as ProCycle, by which we use to trade prop accounts and pass them. Really, this strategy is not only fit for prop firms. You can employ it also in all your trading experiences, right? So we're happy to boast about the 2-line strategy. That's one of the best strategies you find on risk management and on maximizing profit in this industry. So I'd like you guys to stick with us, from day 1 to day 2 to day 3. And also, lastly, we are going to be learning about securing profit and withdrawal, right? So like I mentioned earlier, this is a recording of day 1, of our day 1 training, and I'm glad to have you guys around. So I hope this will be I pray that this is going to be a fulfilling experience for you guys. And I want us to get started, really. So a little bit about my story. My name is Abayomi Oyeshola once again, and I attended the Polytechnic Ibadan. That was between 2011 and 2015. And then I attended the University of Ibadan in the year 2015 to 2017. So I did, in my poly days, I studied civil engineering, and in the university I studied mathematics. So you can pretty much call me an analytical person. Like my brain is more analytical than most people's. I will say that. And so I think for a person like me, Forex is more like a default place for me to find myself. But much more than that, more than being an analyst, you have to be someone that is a risk taker and a manager, right? So I have developed that skill in myself, that part of me that, okay, I want to be a risk taker, and much more, I want to be a risk manager, because that is what really makes money in Forex, really. And okay, So after my school days, after graduating from the University of Ibadan in the year 2017, I went for my National Youth Service in um, that was in Jos, Plateau State, and it was during my National Youth Service. That was the first time I encountered forex. That was the first time I learned about forex, and I remember that time I paid about 22,500 to learn forex, and my trainer then, the man only taught me for one day. He taught me for one day, and he escaped, and that was strange. So I started looking for him about, okay, guy, you promised to teach me, like I paid you, you have to teach me. He said, oh, he was sorry, he did not have enough time to teach us now. Myself and a few couple core members, a couple of core members, and he said he did not have the time to teach us, but the thing he can help us with is that, okay, he's going to give us an opportunity to invest with him. So we give him a certain amount of money. That was he said the least he could collect that time was $200, and it was, as at that time, $200 was a dollar was about 300 naira. So the money was quite much, and that time, I'm a Nigerian, and we spend naira in Nigeria. That time I only we were collecting 19,800 as alawi. So I was just scraping my part of my alawi. I was scraping it, and I gave it to this man until it was about $100. Then I got $100 from another friend, and we invested it with this guy. And the strange thing happened. After about a month or two, the guy blew the account. Right? I couldn't get the refund of my college, of my training fee, and my money was lost. So that time I had a skeptical view about forex. Like, okay, this guy is supposed to be an expert. Blew my money. I have a friend, one of the guys that we did together. The guy lost $600 to this man, and it was a souring experience for us. And I just thought that to myself, I don't think I'm going to be doing this for us. But after graduating from NYC in 2019, and then I started working, and I told you earlier that I'm an analytical person, so I feel like I would thrive more in areas that are hands-on, something like tech, something like forex, and things like that, things that require you to engage your mind and to use your hands. So I thrive more in those kind of areas, and that was what I did. So I started working for a company called New Horizons, and what we do is we train people on how to code, on how to do graphics design, and a lot of online stuff. That's what we train people in, and I pretty much started coding that time, but I wasn't really finding much joy in it, and I feel like, okay, we don't have to go through a lot of stress to make money, and I think that must have been quite naive for me, because later I got to find out that anything you want to do, anything you want to succeed at, you have to invest a lot of time. It's like you have to for you to become good at it, you have to invest time. And so that time I was looking for other means of income. I delved into crypto. Then later I got into forex. I went back into forex. I loaded my account about 3 times, and I blew it off. That was how I lost all my money again to forex, and I said it all a second time that I was not going to do forex again. I told my friend Dikpo Adepoju, you guys must know him, you should know him, on Twitter. I told him I was not going to do forex again, and, and that was how I concentrated on my business. So later I got another job as a business manager for an e-commerce firm, and I did that for a couple of years. Not for a couple of years. I did that for 1 year and 1 month. And it was at that point that my business and the business owner then, he told me that he wants me to, that's Dr. Tayo, he told me that he wants me to come into Forex. He has a group of people that trades Forex for him, and he wants me to learn it because he saw that I am skilled in technical and analytical situations. And I was quite skeptical about it, but he said I should just give it a try, and I did. And yeah, I fell in love with Forex. That it was then I knew that, okay, the mindset I had about Forex before was poor. It was a wrong mindset. It was mindset of a gambler. But I knew that it was later I got to know that forex is actually very technical stuff, and you need to you have to be very serious about learning it and about succeeding in it. You have to learn the ropes. So I was trained by a man called Mr. Matthew. Mr. Matthew has been trading forex since around 2003, and he has made a lot of money from forex. And I had a wonderful time learning forex from him. And later, after I left the job, it means that tutelage with Mr. Matthew was over, and I had to go and look for other ways, other means of risk management about on trading and all. So I had to do that, and when I did that, I I was able to come again. I came. I met with Dipo of Adepoju. I started Pro Cycle together with UCT, Jennifer, and Janet. Right. So I started. I joined Pro Cycle together with these guys, and that was September 2023. And it was as Pro Cycle that I started trading forex again. Yeah. So my experience with prop firm really is that my first encounter with prop firm was the first prop firm I traded was in April or May of 2023, and that time I just it was a friend, it was people that gave me that account. He said, okay, I should trade it, and I traded it, and because I was quite skilled in trading also, so I was able to make some money, and it remained about $500 to pass the evaluation stage. But that day, I blew that account. Like I entered the daily drawdown, just after a lot of hard work, and it was a very very painful experience because I thought that okay, I was just like a little bit close to breakthrough, but I lost that account. I'm sorry about my voice if it's quite low. Uh, I'm battling Qatar and I'm recovering from it by God's grace, right? Okay, so so after that time, I have a couple of friends. They tell me participate in this prop firm competition, and I was like, it's just a waste of time. But when I started out with Pro Cycle, and we started trading for prop firms again, and because then I really thought about okay, guy, you just have to sit down, find a way. Because when I discovered the advantages of trading prop firm, I just knew that okay, I needed to sit down and find a way to succeed with trading prop firm accounts, right? There are people that because yeah, prop firms, you can say prop firms have stringent rules, but there is a way that you can make those rules, you can make them work to your advantage. Like they can make you a better and disciplined trader, and that was what I did. Right. So that's just a little background about my story. I'm sorry, it's quite long, and I would just like us to go straight to the points to the reason why we are here now. And so these are my team members, the Pro Cycle team. I believe most of you know Dipo Adepoju, and you can connect with him as Dipo Adepoju on Twitter. Then we have Janet Moyosore Oluwa. You can connect with her at Janet Moyosore. And we have Adekoya Damilola, popularly known as UCT. So you can connect with him on his Twitter handle at UCT_. And Jennifer Omozenjele, she's one of the excellent people, one of the most excellent people I know. And you can connect with Jennifer at Omozuzio on Twitter also. So please do well to give us a follow. Give me a follow at Yomi Oyeshola also. At Yomi Oyeshola, can give me a follow there also. So let's go into the crux of the matter. So what are prop firms and how do they work? What are prop firms and how do prop firms work? So the meaning of prop firm is proprietary firms. Proprietary firms. And according to Google, a retail prop firm, which is short for retail proprietary trading firm, is a financial business or company that provides trading capital and resources to individual traders, commonly known as retail traders. I will take that again. A retail proprietary trading firm is a financial business or company that provides trading capital and resources to individual traders, commonly known as retail traders. In essence, these companies provide funds to traders at a discounted price so that they can trade and make profits, which is then split at a stipulated percentage between the trader and the firm, right? So any profit that is made in the prop firm is split between the trader and the prop firm. After all the criteria listed, after all the rules of engagement are obeyed, right? So I'm starting from this place because there are some people that they've been asking me. They know about forex, but they don't know about prop firms, right? So prop firms are just people that you can leverage on. They are companies that you can leverage on to get funded, like to earn money from trading forex. And how do they work? Is that you pay a certain amount of money, and in order to purchase a capital and to purchase an account with them. So and there are different accounts, and it's the account sizes are dependent on your fee, the amount of money you want to pay. So for example, there are some prop firms that they you can purchase a $5,000 account for $32, for $49 and thereabouts. There are some that you can purchase an $100 account for like $369. So these accounts are in grades, and if you can follow them, if you can follow their rules and get funded, that means that you will be able to you'll be funded, and then you'll be able to keep trading with them, and you earn more money. You can even earn more than the amount of money that you invested in the first place. So these are very, very good places that you can take advantage of. They are good stuff you can take advantage of in your forex journey, especially if you don't have capital or funds to trade. I see a lot of traders that come to my timeline and they tell me, okay, I should help them out. They don't have accounts to trade, although they are very skilled. Like, there's no way you can prove to me that you are good at trading if you don't have a track record, you don't have a result. So you need results in order to what? In order to know how to trade, in order to prove that you can trade. And really, what I can tell you is that if you know that you are skilled at trading, you have a good risk management principle, you have a winning strategy on the market that you obey all the time, you are a disciplined trader, you can just raise a little money, and start trading a prop firm. So in a prop firm, you get the first thing is some of them ask you to do the evaluation. Some is one evaluation to this, and some is two evaluation. After you've passed those evaluation stages, you get funded. Then you start trading your funded account. Then you can start withdrawing money. You can earn more and get more, get bigger accounts. For you to trade. So please, this is, I believe, prop firms are a very good way for those who don't have trading capital, or you don't have enough trading capital to start. So with that said, the essence of this bootcamp training is really to help you, the trader, to become proficient at trading prop firm accounts. A lot of traders have been doing prop firms the wrong way. You've been trading prop firms the wrong way, and I'm here to train you on how to trade prop firms the right way, how you can get to funded, how you can start making withdrawals from trading prop firms, right? And these are some of the accounts that I've traded. As you can see, the first one, this is an 100K account, and I was making about 13,600 on this account, right? So these are some of my prop accounts. A lot of between the month of October 2023 and December, I traded 7 prop firm accounts. Like, I was able to trade 7 prop firm accounts, and I took 4 or 5 of them to funded. Right, I got about 4 or 5 of them to funded. So I did that in quite a short time, because I really started trading prop firms in proper around September 2023, and within a month I started trading and I was getting funded. So this shows that, okay, this is something that is actually achievable. This is something that you can get doing. This is something that you can make steady income, you can make withdrawals from, if you do it the right way. And I'm here to help you guys to do it the right way. My team is here to help you guys to do it the right way. right? And I will come back to this later to explain some things. And I would like to go, okay, is trading prop firm accounts good for you? Is trading a prop firm account, is it good for you? So that's a $1 billion question, really. I've met people that they've said they can't trade prop firms. It doesn't make sense. You pay money, you pay money to them, and then you start trading. They give you demo accounts, two demo accounts, you trade it. You pass the first one, they give you another demo account, you trade it, and it's until you pass. Then that's when they will give you a funded account. This thing is all about perspective, and it's also about mindset. Before starting this bootcamp, in our group page, I sent a message about having a positive mindset. The kind of mindset you have about something shows if you are going to succeed on that in that thing in the long run, right? I will tell you also that when my colleagues from work then, when they were trading prop firms, that was in 2022. I really, I saw it as a waste of time, but I just felt like, okay, I would rather get a $200. I would get $200 and save it, and start trading it and making my steady withdrawals. Yes, that's a nice perspective to it. But if you are thinking about skill, if you are thinking about being disciplined as a trader, I believe prop firm is very, very good for you. And until I started trading prop firm in September 2023, that was when I knew that, okay, I can actually succeed at trading profit. It's just about having the right mindset towards it, really. So it all depends on your perspective. You can choose to trade prop firms. If you have a bad experience about it, but you still want to pursue it, you still feel like, okay, there are people that are making withdrawals from prop firms, and you want to be part of those people. This course is for you. And if you are one of those that you feel like, okay, you just want to get one or two information, and you might consider trading prop firm in the future, this program is also very good for you. This program is meant for you also. So, and why I think prop firms are great? Why do I think that prop firms are great? Okay, um, prop firms in and of itself, I won't say that they are great. I believe a lot of these prop firms that are around these days, they just want to take the traders' money, right? Some of them, they don't have your interest at heart. I believe that if a good business model is a business that is a win-win situation both for the business owners or the business people and their clients, right? So, for example, if I sell shoes, for example, if I'm into shoes, I am expecting, like I want to sell the best shoes, right? I want to sell the best set of shoes for you guys, and then if you buy my shoe, I want you to see that, okay, the shoe is durable, the shoe is the shoe does not it's not subject to wear and tear early. It's something that you can get at an affordable price, and I want it to be a win-win situation for you, because if you enjoy using your shoe, it means that you are going to make another purchase with time, and then more likely you are going to refer another person to come and buy shoes from me, right? But some of these prop firms, they don't do that. Like the model they employ is not a win-win approach. They want to make all the money. They want to make all the money, and they don't want you to make money. Some of them, even if you get funded, excuse me, please. They have some hidden rules that if you're not careful, you will lose. You just have wasted your time trading their accounts. I want you to escape those traps, right? And I'll take you through some things that you need to do to escape those traps. But the first reason I want to tell you, the first reasons that I think that prop firms are great is that it will help you to become a disciplined trader, and you will be forced to learn how to trade correctly, right? That's one of the benefits of trading prop firm. You become more disciplined, and then you will learn how to trade correctly. We have a lot of traders that they think that they take forex trading like gambling, like sporty bet. But even for sporty bet, those who do sporty bet very well, those who do sports betting very well, they are those that they analyze technically, like they analyze their bets even before they take those bets. I don't do betting, But those who make so much money from it, there is a way that they do their calculations, right? Those who go to casinos and they do their calculations. And forex trading is just like that also. No, I don't believe forex trading is gambling, but I know that you can gamble in it. But forex trading, for you to succeed in it, for you to make money in the long term, you have to be extraordinarily disciplined. You have to learn how to stick to rules. You have to learn how to wait and take trades only when you see your setup. Like you have to be very smart. You have to be disciplined, right? You have to learn how to trade correctly, and that's one of the things that I've come to train you to teach you in the course of this bootcamp training. Also, number two is that you have to practice proper risk management. Prop firms will help you to take proper risk management. What I'm talking about here is for those who want to succeed with prop firms. You don't have a starting capital, right? You don't have a starting capital, but you want to make money from prop firm, from trading prop firm. This is a good place to start, right? This is a very good place to start. Just you have to learn how to do proper risk management. And I said earlier that ProCycle has one of the best trading strategies in risk management and in making profits in this market, right? So if you want to do great at prop firms, you have to be disciplined, learn how to trade correctly, and then you have to practice proper risk management. Proper risk management. The third reason why I think prop firms are great is that they will help you, they will force you to find or to develop a winning strategy. For you to succeed in prop firm, for you to succeed in forex markets, really, and for you to succeed, especially trading prop firms, you have to develop a winning strategy. You need a good strategy to win in this market, right? You need a good strategy to win. And also, the last but not the least is that prop firm, if you want to succeed as prop firm, you have to learn to wait, rest, observe in between setups. You want to be observant. You want to check that, okay, you are doing the right thing. Excuse me. You're doing the right thing. Excuse me. You are doing the right thing by waiting for your setups. You only want to trade your setups. The way a lot of people trade forex, I've been there before, so I understand. I can relate to how you might have been trading, but a lot of people they see setups everywhere, especially those who do liquidity, who trade liquidity. Liquidity is almost everywhere in the market. You just see the setup, enter, but forex is not designed that way. Forex is not designed in such a way that, okay, you only see you see opportunities in the market all the time and you delve into it, because see, the market is fabricated in a way that it is skewed against you. For you to succeed in the market, you have to learn to wait. You have to wait for your strategy to play out. You have to wait to execute when you after you have executed your strategy. Because, for example, if you enter a trade, let's say you enter gold at 2020, you enter gold at 2020.00, and you are projecting that, okay, gold will do 100 pips. That's from 2020 to 2030, right? And then you place your stop losses at 2016, for example. So that means you are using a risk reward ratio of 4 to 10 or 2 to 5, right? That's your risk reward ratio, or 1 to 2.5. That's the risk reward ratio you are using. So if you take that kind of risk, and you see that, okay, if gold might go from 2020, get to 2026, then come back to 2022, get back to 2025, come back to 2018. If you are not patient, you may be forced to close your trade, or you think that, okay, let me just this thing is not going my way, and even if for those people that even analyze the market and see that, okay, this thing is going to get there, it's going to get to my target, but that interplay, that that waiting period, if you are not patient, you are not going to succeed in trading profit. So you need to be very patient. Let your trades play out correctly. You don't have to be don't be impatient. You can't afford to be impatient in this market. You have to wait. If it's going to eat your stop loss, so be it. Let it just stop loss. That's why we talk about proper risk management. Also, before I leave here, something about risk management is also about your lot size. What is the lot size you are risking per trade? Some of you, if you execute your lot size, excuse me, if you initiate a trade, you're thinking, okay, this lot size, is only going to you're looking at the lot size from the potential profit you want to take from it. You are not looking at your stop loss. You are not looking back at your daily drawdown, right? Those things you need to consider. Those things. For me, whenever I want to initiate a trade, I'm looking at, okay, what is my stop loss? Like, will I be able to bear this stop loss? Will my accounts be able to will be able to stand the test of time with this stop loss, right? Excuse me. You want to check if your account is going to withstand the test of time with this stop loss, right? If this stop loss is it, what will be the implication on your account? Is it something that you can afford? Is it a risk you can bear? Right? You have to consider those things. You have to consider these things, right? You must make sure that it's a risk you are able to afford. You can afford to take that kind of risk before you initiate the trade. Your account is able to withstand that kind of risk so that you don't enter the daily drawdown or the maximum drawdown, right? So please and please, I want you guys to take these things to heart. For you to succeed with prop firm, you need to learn discipline. You need to learn how to trade correctly. You need to practice proper risk management. You need to develop a winning strategy, and you must learn to wait and observe. Your waiting period are points for rest. There are periods when you have to be to sit back, observe what is going on in the market. I tell you, if you are always trading in the market, you're always in the market, you are more likely to lose. In fact, the fact that you are trading always in the market, you're always in the market, is an indication that you are not a profitable trader. Right? When you are a profitable trader, you are thinking about how to withdraw your money and wait for another setup that gives you that money. Right? So please and please, I want you guys to practice proper risk management, develop a winning strategy, be disciplined, learn how to trade correctly, and learn how to wait. That's how you can succeed while trading prop firms. Okay, so what are the rules for success? The rules for success in trading prop firms. Now, these are some of the rules that I would say that I have violated some of these rules, and it cost me a lot. Some accounts that I lost. Of course, I've traded more than 7 accounts, more than 7 prop firm accounts. But some of those, a few of them that I've lost in the beginning, they were because I did not adhere to some of these rules here, right? So you have to learn how to adhere to the rules of engagement in prop firm. A lot of different prop firms have different rules. Different prop firms come with different rules for traders. They're going to purchase their accounts. You have to read. The first thing is that you have to read and digest the instructions and rules that guide the trading, that particular prop firm before making your purchase. Before you make your prop firm purchase, you want to learn the rules first. A lot of people just either you win a giveaway and then you start out immediately trading that account. That is very wrong. You can't succeed with trading in that way. There are some that they don't even bother to check what is the daily drawdown. They just assume that, okay, because I've traded, let's say I've traded a $10,000 account with, for example, funding pips. So it is the same rules that apply with trading a Blue Guardian prop firm account of 10K. No, each of these prop firms, they have their own unique set of rules, their own requirements. And if you don't adhere to them, if you don't read them, if you don't know them at the back of your mind, you might lose that account. In the course of my trading prop firm in the past 3 months, I have traded at least 5 different prop firm accounts. I've traded a Blue Guardian account, a Gold Folded account, a Funding Pips account, a Funded Next account, a the TFT accounts, the funded trader accounts, at least those five. I remember, I know that I've traded those. I think probably a few more. Yes, traders with hedge accounts. That's the sixth one. I've traded several accounts. I can tell you that each of these prop firm accounts, their rules are different from each other, right? And just to help you, I'm going to quickly open my tab and go to different prop firms. Just as a side note, excuse me, please. As a side note, I am not at the time of this bootcamp training and this recording. I'm not affiliated to any prop firm accounts. I'm not affiliated with them, so I'm not trying to sell a market for any prop firm accounts. Please, I want you guys to get that. And I don't know, probably in the future I might get affiliated with one of them, but for now, I'm not affiliated with any prop account, any prop firm rather. And the reason is because I want to be open to you guys, with you guys, right? That okay, I don't have a vested interest with any of these accounts, with any of these prop firms rather. And I want you to, irrespective of the prop firm that you choose to trade with, I want you to come with the mind that you want to succeed. I want you to be able to succeed by trading that account, right? That's the goal of this bootcamp. And also, I'm sorry, I didn't share the vision of this account. The vision of this bootcamp training is to help a lot of traders, to help about 5,000 traders, become funded trading their prop firms in 2024. I want to help 5,000 traders get funded in 2024. And all I want that to be is that between January and February, I want to help at least 500 people get funded. 500 people, I want them to be able to purchase their prop accounts, and check this, consult with me, or check this bootcamp training and see how to trade prop firms correctly and what to succeed at trading it. So that's the goal. That's the goal. So 500 people every month to get funded, and at the end of the year, I want to have helped 5,000 people to get funded from trading prop firm. I believe we can all achieve that together, right? If you are always afraid of trading prop firm, if you follow these instructions, you follow these lessons, and you adhere to them, I want to promise you that you will become funded. You will start getting withdrawals in prop firm. That's if and only if you adhere to the instructions that will be passed across to you during the course of this training. All right. So the first account I want us to see is a goat funded trader, the goat funded prop firm. So this is goat funded, and I want you to I want to take you through some of those rules. And you see that each prop firm, they are different from the other, right? So goat funded, they allow you to trade forex, metals, indices, stocks, right? They don't trade synthetics, right? I can see it's very important that you learn their rules before you embark on trading any prop firm, or before you embark on buying any prop firm account. Learn the rules. Learn the rules first. Go and check what are their requirements, right? So you can see they said they have one and two step verification. Let me just calm down. So they said withdrawal is on demand. For the first payout, traders have the option to initiate a profit withdrawal just 24 hours after executing their first trade on the live simulated account and with a minimum of 3% profit on their accounts, right? So so they say no time limit and all those things. So I would just like to come to our challenge plans, right? So you can see this is a normal account. For a normal two-step account, that is 100K. Let's say for a 25K account, let's do for a 25K account. So they tell you that, okay, their phase one is what? The profit target for phase one is 8%. And for the second phase, the profit target is 6%. Of course, if you have a funded account, there's no profit target, right? Then their minimum trading days is 0. Minimum trading days simply means that what? It simply means that if you can pass this, if you can make this 8% target within a day, within 2 days, within 3 days, within 21 days, it doesn't matter, right? In as much as you make this profit target and you do not enter a daily drawdown of 4% or a maximum drawdown of 8%, you are good to go, right? And for a phase two, for that, their phase two account is 6% profit target. 8% of 25k is what? 8% of 100k. If 8% of 100k is 8,000, then 8% of 25k will be divided by 4. That's $2,000. So the profit target for it for a 25k for 8% for a 25k account is that's 2,000. And for a the 6% is, it will be something around 1,300 or thereabouts. Excuse me, 1,500, I guess. Yeah, that's for phase two. And they have a daily drawdown of 4% in the funded. The maximum drawdown is 10%. Maximum drawdown is 10%, and that means, okay, the least you can get to is will be that would be something like 22,500. So you can't afford to get to that point, so that you don't lose that account, right? And excuse me, okay. And then trading period, you can see no time limit. That trading period, they don't have a time limit. Their leverage is 1:15 for all the phases of you operating the account, and the profit split is, you don't have a profit split in the challenge phases, but you have up to 95% profit split. And you can see the price for the 25k challenge account here is $144. $144. That's that's the price you get a 25k account with them, right? So you can see the evaluation process. You have to read all these things before you start trading with these accounts. Read them, go through them, right? The reason I'm hammering this is because I've lost at least 3 accounts, 2 or 3 profit accounts, because I did not study their instruction. I did not go through their instructions, right? And it's always a painful experience. So you don't want that to happen to you. Okay, so the next prop firm I want to consider is a funded next prop firm account. Funded next prop firm. So all these instructions, right? What makes funded next different? All these things, you have to reach them. So funded next practices a balance-based drawdown and all. So I'm going to take you through what it means to do a balance-based drawdown. What it means, I'm going to take you through that later. Excuse me, please. Okay. All right. So now depending on the account size, the type of account you want to buy, they also have different ones, right? So these are Stellar Challenge. And for Stellar Challenge, you can see a swap account, a swap 2-step account. So these are their account sizes that they have: 600, 150, 6,000, 15,000, $25,000, and on and on. So they say profit share from challenge phases 15%. Profit share here is also 15%. All of their profit share is 15% for the challenge phases. Excuse me, please. And then the profit target is 8%. Just like that's for phase 1. The phase 1 profit target is 8%. And the phase 2 profit target for a 6k account, or any account anyway, is what? 5%. Now, you'll be wrong to have assumed that excuse me, you'll be wrong to have assumed that the same rule that applies to good funded applies to funded next. Now, the profit target for trading a phase 1 account with good funded is 8%, while for phase 2 account is what? 6%, right? If phase 2 is 6%, but for fundedness, it is 8% and what 5%, all through the accounts, right? And the maximum daily loss is what 5%. For gold funded, the maximum daily loss is what, or daily drawdown, daily loss, they are the same thing, is what 4%, right? 5%, 4%. The maximum overall loss or maximum daily drawdown is what? The maximum overall drawdown, maximum overall loss is 10%. Is the same thing for what? For gold funded. 10%, 10%, right? Excuse me. And then they practice a balanced, they practice a balanced based drawdown, right? They practice balance based. They don't have a time limit. Now they have a minimum trading day, a minimum of 5 trading day. Please give me a minute. Give me a minute, please. So I have sorry about that. A minimum of 5 trading days with funded nest accounts. But for a gold funded account, they don't have a minimum. There's no minimum trading day. So what this minimum trading day means is that, okay, if you can pass your account, if you can pass your challenge within a day or two, you are good to go with gold funded. But for funded next, it means that you must have traded that account for at least 5 days. You can trade for more than 5 days, of course, but before you move to the next stage, you must have at least completed 5 days of trading that phase, right? So please and please always get this in your mind. Bear this in your mind. Check through their rules. The trading leverage now for funded next, the trading leverage is 1 to 100, right? But for here in gold funded, the leverage is what 1 to 50. Now, I'll just what's the difference between 1 to 100? This leverage, I know a lot of people don't understand it. It just means that, okay, what's the size of lot size you can use? What's the amount of lot size you can use when you are trading that at a particular account? That's the meaning of minimum trading day. The leverage. So for a 1:100 account, so let's say that account is let's say it's a $100,000 account. It's a $100,000 account. Looks like I want to reduce this a bit. Okay. And the leverage is 1 to 100. This means that for this account, you can trade between 0.01 to 10.0 lot size. That's the lot size you can use. Yeah, the lot size you can use for that account is what? From 0.01 to 10.0. That's just the short form, right? But for a leverage that is 1 to 50, it means what? Your lot size will be from 0.01 to 5.0, right? 0.01 to 5.0. So that's the maximum. This is the maximum lot size you can use. This is the minimum lot size you can use. That's for an 100K account. So if it is now for a 50K account, you know that, okay, it will reduce, this will reduce, this will reduce, right? Because as the account size increases, it will as the account size reduces, the leverage also reduces. So this is for an 100K account, right? This is for an 100K account. So please and please, I want you to always bear that in mind. If you need more clarification about it, you can drop it in the comment section and we'll go through it later. Okay? So please and please, it is always important that you go through each of these accounts. So you can see they have different different ones. Then the next account I want to open is Funding Pips. The Funding Pips, you go to their website like usual, like always, and study, read their rules before you start. Right? Read their rules. It's always important that you read the rules. So they will tell you, okay, let's do Funding Pips, a 10K account. Okay, so Funding Pips also, they have a minimum of zero trading days. They have a maximum daily loss of 5%. That's for your 10K accounts, right? And actually it's same for all of them. And the profit target of 800, that's 8% for the first phase and the second phase, right? So they use student and practitioner. The student just means phase 1, practitioner means phase 2, really. And they also practice a leverage of 1 to 100, right? 1 to 100. A maximum daily loss of 5%, that's daily drawdown of 5%. Minimum loss of maximum loss of 10%, and all. So you can get their 10K accounts. You can get their 10K accounts for $60, right? For $60. And let's go to Blue Guardian. For Blue Guardian, now Blue Guardian, let's compare their 50K accounts. You can see trading period is unlimited. So as long as you want to trade that account, and then their minimum trading day is zero minimum trading days, a maximum daily loss of 2,000. That's 4% rather. So you have 4% for your stage 1, stage 2. The maximum daily loss is 4%. The maximum loss is 8%. Now, if you compare that with Funding Pips, their maximum daily loss is what, 5%. But for Blue Guardian, it is what, 4%. Then for Funding Pips, the maximum, the overall loss is what, 10%. But for Blue Guardian, it is what, 8%. Right? So you want to be careful about all this, really. You want to be careful as you take them. So you can see the refundable fee is $87. You have to take note of all these things. Your profit target is 8%, right? For phase 1, and for phase 2 is 4%. So each of these things, you want to consider them. You want to check them out. Be careful. Read their instructions. Read the instruction about phase 1, phase 2, right? About when you become a funded trader. Read these instructions. Okay, now look at this. They said that you can trade responsibly and consistently, and you can earn up to 85% of the profit you make, right? So let me tell you that you can earn up to 95%, right? So you have to check their instructions. The purpose of going to reach out and every one of these things is to look at their instructions. For you to always check their instructions before you start trading these prop accounts, right? Because if you don't look at their instructions and then you enter their they tell you that you've breached the account, it looks like, okay, they are cheating you or something like that. But you don't want that to be the case. So this is TFT, the funded trader, and now each of them, they have their unique selling points. Each of the prop accounts, they have their unique selling points, right? TFT has a minimum trading day of 5 days for each of their pieces, right? And then their leverage is 1 to 200. Remember what I told you about leverage? Now, if for TFT it is 1 to 200, it means that what the maximum lot size you can use is what, 20.0 for that's 100K account with TFT, right? Excuse me, please. I'm sorry, I'm in a trade and I'm trying to just by the side look at it to make sure that my trade is going well. All right, so my trade is going well. And okay, so their profit target is 8% for the first phase. For the second phase, it is 5%. Maximum loss is 10% for the first phase and as well for the second phase, right? So they are very, 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 very wonderful. Now, TFT practices an equity-based drawdown. They practice equity-based drawdown. That's they said equity and balance. Just it's just equity based. So now I think I will go next to the equity based and balance based. That's what I will get next to. So, but first of all, please and please always read and digest the instructions of each of these prop firms. It is very, very important. It is for your own good. It's for your own benefit. So you have to verify also if the prop firm practices equity based or balance based daily drawdown. Right? I have lost an account before because the account is equity based and I thought it was balance based. And that account, it was a 10K TFT account. That's the last listing I showed you. I could have avoided that if I had studied the instruction, if I had gone through their rules and instructions, I wouldn't have lost that account. But I lost it because I did not go through the instructions. Now, the way these guys practice the equity-based drawdown is that okay, by 5 p.m. their time. I think they are based in Dubai, and by 5 p.m. their time, if your equity today is less than the required daily drawdown of the equity from yesterday, that means you are losing the account, right? So please and please always check, know the kind of account you want to purchase or you want to trade. These instructions will save your life. Like if you're able to stick with these instructions, you are about 50 to 70% sure that okay, you will not blow that account. Nothing can make you blow that account really. Right? So always verify if the account is equity based or balance based. Just to expand further on that equity based and balance based, let me explain for those who don't understand. Let me clean my whiteboard. And I'll go back to the testimonial I talked about the other time. Excuse me. All right. So this particular account, my third snapshot here. Excuse me. You can see here that these are 100K accounts, just for the record. And my balance at this point was $116,000. And the equity had risen to $128,000. That's because I was making 12,500 USD profits on this balance, right? So 12,000 plus 16,000 gives us 128,000, right? So I was up 12,500 on this account, right? So I want to quickly do a math to explain the difference between a balance-based drawdown and the equity-based drawdown for you. Excuse me. Let me go back to that. Okay. Let me go back to my whiteboard. So I have a balance of $116,000, right? And my equity is what? $128,000. That means what? My profit on this account at this time was like $12,000. $12,000 profit. That's what I was making on this account, right? Now, for a balance-based drawdown, that's the short. Balance-based drawdown. This means that if within a day, if I keep this $12,000, if I keep it running, right? Remember my balance is $116,000, and my profit is what? $12,000 at this time. Now, if I don't want to close this trade now, I want to keep the trade running till tomorrow, right? Till tomorrow morning or tomorrow afternoon. Because I have a profit target. I have some profit targets in my trades, and I'm trying to get to that profit target. So I keep my account running till that time. Now, if peradventure by tomorrow this account, this, the market starts experiencing and giving up, there's a downturn in the market, and I start losing this $12,000. Remember that at this time today, as at the time of this recording, this is like 1:45 p.m. and I'm up $12,000 on this account. So now, if by tomorrow, let's say by tomorrow, 2 a.m. tomorrow, the market starts falling so aggressively, such that I lose 5,000. Now, for an account that, if this, let's also assume something, that this account, let's assume that this account, the daily drawdown is 5% for this account. That's 5%. That's the daily drawdown. That's the daily drawdown on this account, 5%. Okay. So if the daily drawdown is 5%, that means if I should lose $5,000 from this account, due to market downturn, the market starts, probably I was buying and the market starts selling, and I make a loss of 5,000. 5,000 and 5% on this means what? It means $5,000. That means that you have a $5,000 loss on your profits. Now, $5,000 on this $12,000 profit, that will give me what? That will give me $7,000. Right? If I have that kind of drawdown, I wouldn't have lost this account. That's if it was a balanced based drawdown. For a balanced based drawdown, I will not lose that account. I will not lose it. Right? Whenever my profits has become short by 5,000, I won't lose the account, because I still have $7,000 running in a balance based account. In fact, if I should lose the whole of this $12,000, in as much as my capital, my balance is still 116,000, and I should lose everything. If it is if it becomes minus $12,000, such that this becomes $0, right? Now, if it becomes, if all my profit is taken, this will become 116,000. My equity becomes 116,000 again, right? Just the same as the balance. And I close my trade. I will still I will still have that account. I will still retain the account. The account is still retained, right? I'm still able to trade that account. But in fact, the only time I can lose this account is when I must have at least lost $17,000 in that particular day. $17,000 will become what? Minus $5,000. It will become minus $5,000. That would mean what? That's what? 116 minus this will have become this is 128,000. So 128,000 minus 17,000. My equity before was what? My equity before was what? 128,000. So now, from this 128,000 equity, I've made 12,000, but later, the following day, I lost what? $17,000. That's minus 5,000. Now, 128,000 minus $17,000, that will give me what? $111,000. So it is until my equity, and of course, when I close the trade, my balance will become what? This $111,000. Excuse me, $111,000. $111,000. So until my equity has reduced until my balance has reduced by at least $5,000 more. That's my equity has reduced by $5,000 more. That's only time that's what I will have lost this account. Right? So that's balance based for you. So balance based is actually easier to trade. A balance based drawdown, a balance based account is easier to trade than an equity based account, right? Now, for equity-based accounts, let me explain that. Now, for equity-based account is actually a no long term. Okay, so equity-based. So for equity-based, this is it. The equity is 128,000. Remember that I was up what? My profit was what? Plus $12,000. Now, all I need to do to lose this account is that, you know, I carried a profit target or a profit of $12,000 till the next day, right? Till the next day of trading. Now, that $12,000 that I carried to the next day, if the market starts experiencing a downturn, right? And I lost just $5,000 from this $12,000 that I have made. Remember, my equity is 128 and I lost what? $5,000 from it, such that my equity reduces to what? $123,000. It means what? I will have lost that account. I will have lost that account just if by having just minus 5% of my last day's equity. I will lose that account. So you guys, you have to be very careful. If you are trading an equity-based account or a balance-based account, both of them, you need to be very careful. For an equity-based account, it means you might not want to carry over trades till the next day. You want to do day trading. You don't want to swing your trade till the next day, right? So that's how to trade equity-based accounts for your own good, really. And excuse me. And okay, let me get back to the instruction, the rules. Okay, so I believe that with that, I've been able to explain to you. You can understand the difference between an equity-based drawdown and a balance-based drawdown. You have to know the requirements of the challenge phases of the kind of account you want to purchase, and also you have to know the leverage requirements. I've told you, I've also lost an account because of leverage. Like I passed the account within 2 days, but because I did not follow the leverage says 1 to 5, and 1 to 5 means that I can only trade between 1:5. That would mean if my smallest lot size is 0.1, my biggest lot size can only be 0.5. That's the meaning of 1 to 5, right? For this 1:50, it means that if my smallest lot size is 0.1, my highest lot size can be 5.0, right? That's the meaning of 1:50. If for 1:30, if my smallest lot size is 0.1, my maximum lot size will be 3.0 lot size, right? So please always understand the leverage requirement of each of these accounts. And also, please, it's always important for you to ask the right questions. Ask questions from the customer support reps. Call on their customer support rep, speak with them, tell them your issues. If you need clarification, ask them, and those who have traded those accounts, you can also ask them. They have first-hand information about trading those accounts, right? Especially those who have failed, for a reason or the other, so that you will not waste the little money you are trying to gather to purchase a prop firm account so that you can trade. Don't lose that account because you did not listen to instructions, you did not check their instructions. Please and please. It's always important that you adhere to instructions. And so I believe that's a good place to draw the curtain for today's Bootcamp training. Of course, like I said, this is a recorded version of the Bootcamp training. And the reason is just because I want to upload this to YouTube now. So kindly give me subscribe to this channel. Give this video a like. Follow me on Twitter. And so tomorrow, that's on day 2, we'll be talking about trading plan, discipline, and testimonials. And then we'll talk about the prop firm trading psychology. There's a psychology that is required for trading prop firm. This will be handled by Adekoya Damilola, known as ELCT. He's a member of ProCycle. So UCT, this UCT, you'll be hearing from UCT will be taking you through the psychology tomorrow. I will also be around to train you on how to execute, to develop a trading plan, discipline and testimonials, and also how to do your analysis and execution, right? So we are going to be discussing that. And on the third day, Dipo Adepoju is going to be taking you through the best strategy for trading a prop firm account. Like ProCycle has developed a winning strategy. Now, this strategy has 70 to 80% win ratio. To be like, I'm being humble by saying 70%. Actually, this strategy works 80% of the time. Let me say, okay, for gold, after I personally tested it on gold over the course of 2 years, and the strategy, I have a win rate of 80% trading this strategy. Good jokes, right? So this we have the best strategy in the world on how to trade your prop firm. If you can adhere to these strategies, like these are the strategies that I use to pass those 7 accounts that I said I passed, right? So please and please, you learn about that. And then on that final day, day 3, I'll be teaching you about securing profit and withdrawal. Please and please bear in mind that this bootcamp training is free. There are some people that they might want to take advantage of you, not to tell you that okay, you pay money for it. You are not paying money to anybody. This is a free bootcamp training. This bootcamp training is not sponsored by any account, by any prop firm, right? I don't know. Probably in the future, I might partner with a particular prop firm, but for now, this is free. It is absolutely free. Don't get yourself ripped off by people. Thank you very much for your time, and we meet in the next meeting. See you.